Banamex, the longtime Mexican banking business of Citigroup, is preparing to become an independent public company after its parent decided to spin it off. This move will end Citigroup's two-decade push into Latin America and allow it to simplify its global operations. But what are the challenges and opportunities that Banamex will face as a standalone entity, and how does it plan to compete and grow in the Latin American market? Banamex is one of the largest and oldest banks in Mexico, with a history dating back to it has 38,000 employees, 1,300 branches, and more than 22 million customers, including retail, small business, middle market, and pension clients. It also owns a valuable art collection and historical buildings that reflect its cultural and social role in the country. However, Banamex has also faced several headwinds in recent years, such as regulatory scrutiny, fraud scandals, cyber attacks, competition from local rivals, and the impact of the COVID-19 pandemic on the Mexican economy. Its market share has declined from 18% in 2010 to 13% in 2020, according to Citigroup's annual reports. Its return on equity, a measure of profitability, was 9.5% in 2020, below Citigroup's global average of 10.9%. By spinning off Banamex, Citigroup hopes to unlock its value for shareholders and focus on its core businesses in the U.S. and other markets. Citigroup expects to complete the separation in the second half of 2024 and pursue an initial public offering, IPO, of Banamex. In the bank has not yet decided on the listing destination, but a dual listing in Mexico and the U.S. is possible. The spin-off will also give Banamex more autonomy and flexibility to adapt to the changing needs and preferences of its customers and stakeholders. Banamex will be able to pursue its own strategy, invest in its own technology and innovation, and leverage its strong brand and reputation in Mexico. Banamex will also be able to retain its current workforce and assets, as well as maintain its social responsibility initiatives. Banamex's main goal is to regain its leadership position in the Mexican banking sector and expand its presence in the Latin American market. To achieve this, Banamex will have to overcome some key challenges, such as enhancing its digital capabilities and customer experience to attract and retain more customers, especially younger and tech-savvy ones. Improving its risk management and compliance systems to prevent fraud, cyber attacks, money laundering, and other operational issues that could damage its reputation and financial performance. Strengthening its capital and liquidity position to support its growth plans and withstand potential shocks or crises. Diversifying its revenue streams and product offerings to reduce its dependence on interest income and fees from credit cards and loans. Increasing its efficiency and productivity by optimizing its cost structure and branch network. At the same time, Banamex will also have to seize some key opportunities, such as capitalizing on its loyal customer base and strong brand recognition to cross-sell more products and services and increase customer lifetime value. Exploiting its competitive advantages in segments such as small business banking, middle market banking, pension funds management, and wealth management. Benefiting from the recovery of the Mexican economy after the pandemic-induced recession and the expected growth of consumer spending, credit demand, financial inclusion, and digital adoption. Exploring strategic partnerships or alliances with other players in the financial ecosystem, such as fintechs, e-commerce platforms, telecom operators, or other banks. Expanding into new markets or segments within Latin America where it can leverage its expertise and experience. In conclusion, Banamex is facing a historic transformation that will test its resilience and agility as an independent public company. The spin-off from Citigroup will pose significant challenges but also offer exciting opportunities for Banamex to reinvent itself and grow in the Latin American market.